I'm going to get into something that a lot of people don't like to talk about, and it's understanding how to prepare before you go for funding, right? I like talking about that because we just always go and blindly apply, and that is not the way you should be operating, okay? But before we hop into it, none of this information should be considered tax, legal, or financial advice. This is just for informational purposes only. And if you've ever been denied for funding, it's not because you have a bad business or that business funding and credit isn't for you. It's because you did not prepare in the correct fashion and you're not applying for the right product with the right documentation. So today I am going to actually break down how lenders think, how underwriting works, and what to prepare for before you apply to your lender for funding. Okay. All right. So let's hop into it. So today is no selling, no pressure. It's just all strategy, okay? So again, I am on multiple platforms. I am Mrs. Cash Flows. I'm also here just everywhere. So wherever you're watching me, I have resources for you. And I try to go live daily just to drop game. So I help entrepreneurs understand capital, credit, and how to get approved in the correct fashion. And if you stay until the end, I'm going to give you a simple funding preparation roadmap you can use immediately. How about that? Okay. So most people apply for funding too early. That's the biggest problem. And one mistake can cost them months or just denials and never having the ability to get approved, right? So lenders do not approve based on hope. They approve on risk analysis. When they review your file, they ask these three things. Can this person repay? Is this business stable? Is this predictable? If your file does not answer these questions clearly, you increase chances of denial. So I'm here to help you with that, all right? Preparation is positioning, and positioning determines approvals, okay? Cannot stress that enough. So what I'm about to share can literally change how you approach funding forever. There are three main underwriting buckets. Bucket number one is business health. Lenders look at time in business. All right. So a lot of you are used to preparing for traditional banks like national banks, right? Chase, Bank of America, Wells Fargo. Today, I'm going to give you a huge solid one. I'm going to talk about preparing for alternative lending, okay, where they relax in some of their terms, where funding is available for everyone. Good credit, bad credit, time and business can be less than 2 years in order to qualify for a business line of credit. So I hope this is helping anyone. And I'm always happy to help you cross over to the funding side. That's my primary goal, okay? Is that you go for funding and that you know what you're going after and that you actually get approved. So bucket one is business health. Lenders look at the business time and business. 6 months look very different from 12, all right? They look at monthly revenue. Is consistent? Is it trending up? All right. Or does it spike randomly? They look for bank statements, overdraft fees. How are you paying your bills? Negative days, usual activity. Okay. Clean, consistent deposit signals stability. All right. Do you have clients that's consistently dropping things, funding into your account on a consistent basis? Do you have a consistent amount of revenue on a monthly basis? Erratic behavior will signal risk, and lenders don't like risk. Okay. Risk to them equals denial. So here's something most people don't realize. Even business funding often depends on personal credit. Just so you know. All right. Your FICO score tells lenders how reliable you are. Generally, stronger credit profiles unlock better options for you. But it's not just the score itself. They look at payment history, credit utilization. They look at recent inquiries. If the credit cards are maxed out, that increase perceived risk as well. That means you can't handle what's already been extended to you. So if you have high credit card utilization, don't even think about applying for funding. All right. If you have recent late payments, that lowers trust as well. One late payment can kill you. So credit is not just about a number, it's a behavior pattern. That's what they're looking at. And they're not stupid, guys. You have to understand that this entire system has been set up to check your credit worthiness. It's only so much you can doctor and so much you can manipulate, all right? If you're not paying on time, you have high credit card utilization. I always say this, your personal credit profile tells a story. Are you someone ready to step up into business funding, or are you at level 1, money management 101? You can always tell the person who's ready for the next step, okay? Now let's talk about something lenders never advertise, okay? Bank statement underwriting. This is a good one for your notes. This is where they examine at least 3 to 6 months of bank deposits, okay? They calculate averages, they evaluate consistency, they measure expense ratios. If you deposit $15,000 every month consistently, that looks strong. If you deposit $30,000 once and then nothing consistently, that looks unstable, okay? Consistency wins approvals, even if it's $5,000 to $10,000 a month. Predictability lowers risk. Is letting them know that this person consistently get this amount, so we can assume that they can afford to pay this amount, okay? Let's do something powerful. I want you to audit yourself right now, guys, okay? So write this down. Your credit score range, months in business, your current monthly debt payments. Now look at that and ask yourself, are all accounts current? How many hard inquiries do you have within the last 6 months? Are your bank deposits consistent? This alone tells you where you stand. Most denials happen because people never take the time to audit yourself. And if you're a listener of my content, you know I'm always talking about audit yourself, underwrite yourself, okay? I'm not here to inspire you or motivate you. I'm here to teach you how to audit yourself and understand the banking industry and understand if you are ready for funding or not. Okay, that's what I'm here. I'm here to help you reach your personal and economic goal, your economic potential. Now let's talk about capital options for the right, in the correct fashion, okay? There are business term loans, there are lines of credit, there are personal credit strategy. Term loans usually have fixed payments. Lines of credit revolve and allows flexible draws, okay? Which means that it revolves back to you. So when you use that funding, it's replenished and it's given back to you, and it's available to you for a period of time. Lenders look at revenue, time, and business. Again, you qualify for funding, and if you're listening to me and you say, hey, I'm falling up under the parameters that Mrs. Cash Flows is speaking about, hit me up, click the link, book a call, let's check your funding readiness, let's get funded. It's a pre-approval, it's a soft pull, no impact on your credit report, okay? Lenders look at revenue, time, and business and your credit profile. So use cases matter too. Okay, your payroll, your inventory, your expansion, your bridges, your receivables. When your use of funds makes sense, your approvals increase. So you have to know what you're using the funding for. I talk about that all the time. Now I'm going to explain credit card strategy in the correct fashion, okay? Credit cards can be tools too. Okay, I love 0% interest credit card, but discipline matters. If you use credit without a repayment plan, though, it can help you in the long run. That means you ran out and you you built a relationship with all these banks, and if you don't nurture those relationships, it can kill you in the future, even if you do have access to credit repair. Doesn't matter if you get something removed off your credit report, doesn't mean you don't owe them. Unless you have strategies for that. There are strategies for that, but that's not what I'm here for. I'm here to help you get funded, okay? So just because you get something removed off your credit report doesn't mean that they are going to do business with you in the future, all right? So let's talk about credit card stacking It is a strategy where someone applies for multiple credit cards in a controlled window to create liquidity. Okay, there's ways to liquidate those credit cards. That's not something I do either. Okay, this requires strong personal credit, low credit utilization, a clear repayment plan. Okay, it is not just a shortcut and you just sitting up with a bunch of money. All right, you have this money, have a plan for it. Okay, know that you are going to use this money to create a stream of income that's going to afford to pay the debt down. All right, it is leverage with responsibility. Okay, hate to talk to you like you're 2 years old, but sometimes you got to do that. Y'all just get so gung-ho and you just want a lot of money with nothing to do with it. Okay, so done in a correct fashion, right? If it's done incorrectly, it can damage your profile. You got to know what you're doing, all right? So done strategically, it can create wealth for you. 0% funding, all right? Also connect and understand, how to do it in the correct fashion. Okay, so here's your preparation roadmap, guys. Step number 1, pull your personal credit and your business credit reports. Address any inaccuracies, right? And then step 2, organize financial documents, okay? 3 to 6 months of bank statements, profit and loss statements, your tax returns for the past 2 years. Then step 3, match yourself to funding categories, okay? If you don't know where you are, you can always hit me up, book a call. Let's do a soft pull. Let's see exactly what do you qualify for. You never know. Okay, we have startup funding available. You have a year plus time in business available. All right. I'm telling you, we have, because there's a bank will give you funding for 3 reasons. It's your credit, your cash flow, or collateral. You having one of either one of these can help you with funding. All right. If you have a combination, that means you're opening up your pool to funding, to various funding types. If you have all 3, it's up. And that's the goal. Clean credit, nice business cash flow coming in, personal and business cash flow coming in. Have some form of collateral as well. If you have all 3, it's up. Okay, it's like, it's up, okay? All right, so some lenders require 12 months of revenue, though. Not the ones that I deal with. Pretty much you just need 3 to 4 banking statements, to be honest. So just for your own records, okay? So some weigh personal credit more heavily. It depends on the product that you're going after. So step 4, build a clean submission checklist. And here's how. Completed application, bank statements, credit report, profit loss, and a clear explanation of how your funds will be used. Is this working capital? Another thing, if you're like an EMS company, a home healthcare company, a restaurant, or someone that bill invoices and you don't get paid immediately and it's staggered out 60, 90, 120 days, I have options for you for factoring funding as well. People don't even know what that is. I should come on here and kind of talk about that as well, all right? So your profit loss statement, you want a clear explanation how your funds will be used, okay? Okay. Is this working capital? Are you using it to pay staff, to pay payroll? Depending on what you're using the funding for and what your personal credit situation is, after you pull all these docs and run this checklist and this self-audit of yourself, will determine the type of funding products that are open and available to you, okay? Now, when your file is organized, lenders move faster. I can move faster. You can get funding same day. I hate telling people that, but I love surprising like my clients and my mentees. They be like, "Oh my God, it's in there, babe. It's in there." I'll be like, "I know." I never tell them that it's gonna be there like same day or 24 hours. I like the element of surprise, right? Like they just get so excited, like, oh my God, I thought that was going to take a week. Girlfriend, it's time to go to work now, okay? So if you remember nothing else today, remember this, okay? Funding isn't about desperation. It's about preparation. Funding is not about desperation. It's about preparation, okay? I'm going to write that down. I'm going to make that out of a poster. I'm going to make that into a t-shirt. I like that. Yes, when you understand underwriting, you stop guessing. When you stop guessing, you stop applying randomly. When you stop applying randomly, your approval odds improve. When you have someone like me on your side, you 10x that, okay? Every strong funding profile requires 3 traits, all right? Every strong funding profile requires these 3 traits: consistency, clarity, and discipline. All right, so let's wrap this up. Today, just to recap, we covered how lenders evaluate risk, how personal credit affects business approvals, how bank statements are analyzed, how to audit yourself, how to build a preparation roadmap. Funding is not magic, guys. It is preparation plus positioning. I like that. Funding is not magic. It's preparation plus positioning. Every profile is different. Everyone's road to the bag is very, very different, and results vary. Always evaluate your financials. Know your numbers. Okay. And also, you also have the opposite. You have some people who feel like, oh, I don't need funding right now, so I'm not going to build business credit. That is not the attitude to have. The reason you're talking to me is because of that. I had a cash flow heavy business. I had short-term rentals and long-term rentals, so I was getting money every day. So when my mentor was like, hey, you need to, build business credit and position yourself and put all these units and this property and all these assets in your business name, I didn't do that because I felt like, oh, I don't need credit cards. I'm cash flowing. That's how I got this name, from cash flowing units. It had nothing to do with business funding. Now I'm cash flowing businesses. So, hey, transferable skill sets. Okay. All right. That's what I do. I'm here to help you reach your personal and financial economic potential. I am here to help you reach your financial potential. Okay. Never forget that. But me making that huge mistake, the goal is to start building business credit early. If I have nothing, that's the best advice I can give any entrepreneur. Soon as you build that LLC, start building credit, business credit that day. So any accounts that you open up starts to age immediately. All right, because position yourself for funding so that you have a business credit profile that also has age, that has 0% interest credit cards, because 0% interest credit cards are available to new companies. And I'm here to help you stack that on out. Okay, so if your cash flow is decent, you can walk away anywhere from $50,000 to $150,000 in 0% interest funding. All right. If you need help with that, book a call. Hit me up. Okay. I'm here every day. All right. Building the business credit is preparing you for future times. What if your business is doing great right now and then you decide, this is when people think about funding. Oh, now I want to expand. So let me see if I can go get $100,000 from a bank. And the answer could be no, because you don't have any business credit, or you didn't build business credit early. So building out business credit profile prepares you for scaling in the future. Keep this in mind. LLC, business credit build out. That's just the business entrepreneurial way. That's the American way. You want to immediately start separating your personal assets from the business. Okay, that's business 101. All right. Again, every profile is different. Build business credit early. All right. Situations carefully. So always evaluate your financial situations carefully before taking on any new obligations. Do not over leverage with credit. All right. If this gave you any clarity, for more breakdowns, if you're looking for business funding, if you're a startup, if you've been in business for 6 months, a year, 2 years, there's money for you. If you have bad credit, but you have business cash flow, there's funding available to you. If you have no business cash flow, but you have good credit, there's funding available to you. If you have a book of business, future invoices to be paid out, there's funding for you. Okay. I'm always happy to help. So the goal is getting approved responsibly. And that starts with preparation. So if this has been a good help to you, I hope this is information you can use. I'm here every day because I love you. So be amazing. Be great, guys. And let's